We started the week with you with a happy Monday. We're ending the week with you. Happy Friday.
Happy Friday.
What a week it's been. Another up week for stocks. Volatility subdued. What do you make of this?
Yeah, so volatility's it's come in pretty much over the past few weeks. Obviously, we're right around we're within 1% of all-time high on the S&P 500. Next week we'll get the FOMC. We have pretty much 100% chance of a rate cut or a quarter-point rate cut next week. So I think people are kind of hanging out right up until that meeting.
You know, it's sort of interesting. One of our guests earlier this week, Dan Passarelli, he was saying that he's really waiting to see what, you know, you're hearing so much about this rate cut being priced in, but that he's really waiting to see the reaction. He's not so sure that it's either going to be, you know, a bullish reaction or a bearish. Or same thing. Is there an expectation of what way the markets are going to go, or is it a true wait and see type of meeting in terms of especially future language?
It seems like it's going to be pretty much a wait and see. Relative to the volatility, we did see one actual trade go up in the VIX earlier today with some expectations of a move higher in the so-called fear gauge. Somebody came in.
We have a chart of here.
Yeah, earlier this morning, somebody came in and bought about 95,000 of the October 24 calls. So with the VIX, this spot trading right around 14, it would position for a pretty big spike in volatility.
Move up to that 24. Well, interesting. Technically, you could make the case that there's a formation in there that you could make the case that is targeting actually that 24 for certain. What else are you seeing relative? There's lots of talk about October, that volatility. Do you think that it's more bears coming out targeting just some downside, or more a hedge of some sort for, you know, this momentum trade perhaps unwinding a little bit?
Yeah, some of the momentum trades that we've seen recently have been, again, with the markets trading right around the highs, the all-time highs, if you will, actually a kind of factor rotation, if you will. So people are actually moving money around within the market, but not necessarily taking up or down their overall exposures, maybe getting net longer by simply covering shorts. But overall, hedge funds have underperformed, and it seems as though, talking to guys on the street, that that's really the case right now. People aren't adding to longs to get more exposure. They're actually covering shorts.